All right, traders, big shout out to my night owls rocking with me. We have a lot to go over. We're going to be recapping the trades that I ended up making today. I did play calls early into the morning. The first trade was a 4% win. The second trade was a 20% loss. After that, I started playing calls again towards the dip, made a nice 15% return on scalping. Then I decided to switch over to puts once the SPY ripped up to $399, and I made a 25% return on those puts and called it for the day, going red to green. With that being said, I'm going to be breaking down the trades. I'm going to be breaking down the price action analysis. This is going to give you a better understanding on how to read the SPY, how to spot patterns, how to spot key scalping trades like a sniper, where you can get in and out very, very quickly within minutes and make a nice quick 10, 20, 30% return on these contracts. I'm going to be giving you the upcoming trading plans heading into this week. Let's get straight into this video. So in terms of the video that I posted yesterday, I had clearly stated in terms of upside potential, if this 411 continues to hold, and if we see a break above 412, the SPY will be on track to pump to the next resistance level, which was right here, the low of this daily candle at $414, and the closing price towards this daily candle right here towards this 415. That was the next resistance zone. So SPY had the 412 breakout. It then went to the next resistance level that I had stated. And then once it hit 415 and once the CPI data was released, we saw a massive sell-off. And within that video, I had stated the following. If you see the key gap fill level react as a resistance level, the SPY is bearish and it is going to continue to fill the next gap that is waiting to fill below. And that key level was right here at $406.60. As you could see, if we take a look at the pre-market, you can visually see right here that it reacted as a resistance level, which is bearish. This is where it started to form resistance. I'm going to show you the 1 minute candles just so you can visually see that it cracked. And then the high of these bearish wicks in the top of these candles was at that key 406 gap fill level, which is bearish. And then it started selling off, and then it formed lower highs right here, turned previous support into resistance, which is bearish. And it's going to continue to follow up with that downtrend and then start to fill the next gap that is waiting to fill below, which is right here at $400.38. Now, if you see $400.38 react as a resistance level, it starts breaking down, forming resistance, then the SPY is going to start to fill the next gap that is waiting to fill below. And there was a gap to fill below right here at $390.78. So for the most part, pretty much throughout the whole entire day, if you were looking at the SPY, all it was doing was turning previous support into resistance. There was support right here, it reacts as a resistance, and then it sells off. Support right here, it reacts as a resistance, then it sells off. Your support right here at this 399.65 reacts as a resistance, tops out, and then it sells off. And it was turning the key, most bullish potential micro levels into resistance on the top of these lower highs, which means it's a bearish trend and a bearish overall move to the downside. Now, in terms in the morning, I did decide to play calls. I had no strong bullish reason to be buying calls at the levels I was buying calls. I bought calls in the morning because what I was thinking is, in terms of just scalping and not trading the best setups at the best prices, just like quickly scalping at some, key entries. What I was thinking was, SPY just bottomed towards pre-market lows. We're going to have a nice morning spike. And I made a quick 4% win. Then I got back in and it cracked support, held a little bit, lost 21%. Then after that, I started taking a break, and then this is where I started killing it with calls. Yes, with calls, I started killing it for a nice 15% win, 15% win. We had a lot of support. You could see right here visually, this is what I was looking at. You have a lot of support towards this upper 390s levels, and it had a nice little spike there. So I was looking at this overall trend, and I was saying to myself, the SPY, it keeps cracking these key levels. And then when it cracks those key levels, it pumps back up to the previous support level. What do I mean by that? Well, you can see this is key support. It cracks and then has a quick pump back up towards that previous support. Then it sells off for a more bearish trend. So the overall trend is bearish, but what I'm pointing out is when it cracks support, it gets to a point where it bottoms and then it pumps back up to the previous support. Then it turns into resistance, which is your opportunity to play puts. And then in terms of following the trend, you can simply keep scalping puts and buying puts when it pumps back up to that previous support level. That's if you're looking to follow the trend and not scalp against the trend, right? In terms of what I was doing with calls, I was simply scalping against the trend, playing for quick reversals. it worked in the morning. I had a 4% win, and then I had a 20% loss. And then I got back in right here towards $398.10, anticipating that, okay, SPY has key support at this $399.70 to $399.50. It had a quick, nice, big sell-off to $397.70. So I was expecting it because it kept on bottoming, it kept on bottoming, it kept on bottoming, forming bullish candlesticks. I was anticipating that it would pump back up to that previous support level. And that's what I did. I was scalping calls into this dip here. There was a lot of dip buying opportunities. We get in, get out, get in, get out, get in, get out. And then in terms of the pops, the best price for puts is where the previous support right here reacts as a resistance level. So the plan from there was, after taking that 20% loss on calls earlier, I started scalping calls here, made my 15% win, made some money back. And then I told people, if you want the best price for puts, I posted this at 12:08 p.m. If you want the best price for puts, it's $399.70. And I also said the zone would be $399.50 to $399.70. That was at 12:08 p.m. That was all the way down here when I was playing calls. Right here, how did I come up with that level? Because this was the previous support at $399.72. The SPY has been ripping back up in terms of the morning to these previous support levels. And then as soon as it hits that previous support level, that is the top to play puts into the spikes, and the overall trend was bearish for the whole day, right? So my idea was, and I finally caught on to this towards like 12 p.m., was to play puts when we rip back up to $399.50. And that's exactly what I did. It hit $399.50. It formed bearish candlesticks. It went from $399.60 right here, and then I played the puts when it dropped to $399. And then I made a quick 25% return. And then that was pretty much it for my entire day. From there, I said, I'm super bearish. This is extremely bearish. I'm not doing calls from here. I tried puts again, just quick break even, nothing special. And then I pretty much called it. So it wasn't a huge day for me, but I did end up going red to green on the day. So I just wanted to kind of recap the overall price action and discuss in terms of what I was seeing in terms of the SPY. And just always remember, when you see key levels, these key gap fill levels, if they do not react as a support, if you're not seeing a gap close reversal, then it's going to keep on going down to fill the next gap. That's what's going to occur. So basically what I'm telling you is, and I say this, in my previous video, in terms of big moves, they're going to occur when these gaps fill. And there was a gap to fill at 406.60 in the pre-market, the gap build. It reacted as a resistance level. And then you could see the next gap that was waiting to fill below was at $400.38. And then once SPY filled that gap at $400.38, it cracked, reacted as a resistance level, and continued to sell off overall in terms of bearish trend to then fill the next gap. There was a gap waiting to fill below all the way down here at $300.76, right? So the overall trend was bearish, and the way you can really confirm that that overall trend was bearish, when you're seeing all the key levels reacting as a resistance level. In the pre-market, the key gap fill level reacted as a resistance level. Right here, the key gap fill level reacted as a resistance level. When you see, so look at the 5-minute chart, stay with me here. When you are consistently seeing that, okay, this is your support, it's having its bounce, it cracks the support, pumps back up, previous support right here, bottom wicks bullish, now reacting as a resistance after it cracked, turning your previous support into the new lower highs. Short the pop, quick sell off, sell into the dip for your scalps. And then what do? You wait for it to pop back up to that previous support. Reacts as a resistance, starts to sell off, buy puts, and then sell into the dips, right? I'm not holding these. I'm getting in, I'm getting out like a sniper. There's a lot of people saying, oh man, I should have held puts the entire day. People think trading's like this every single day. This isn't an exact science. Not every single day is going to be a big win. Not every single day is going to be a day where you hold. There's going to be days like this where, people who bought puts and are holding them, it rips right back up to fill the gap and they give back all their profits. If they were swing trading, if they bought it open, happens all the time. It's not an exact science, man. This is a game of sniping. That's what I do. I get in, I get out. I'm in control of these positions. I don't hold for very, very long. And it's just rinse and repeat, man. And you could do extremely well scalping. You can make more money scalping than someone who held puts all day. If you were to scalp this both ways, a lot of people are laughing at these little dips right here. If you were to buy calls on every single dip right here, you make 10%, rinse and repeat 10 plus times. And then you could simply play puts when it, cracks the support, pumps back up to previous support right here, reacts to resistance, short puts into the pop into the new lower high and risk slightly above it. Rinse and repeat. And you want to do this on big drops and key levels. You don't want to do this on small little micro drops. A day like this is a perfect situation to be doing that. But yeah, that's my overall thoughts. That was my overall analysis in terms of recaps in today. I want to give a big shout out, and I'm also going to be going into the new analysis, but I want to give a big shout out to some members within Trader Society. So first things first, man, big shout out to Ricky. Ricky Garcia is absolutely killing it, man. Ended up swing trading made up puts, making 185% return. Absolutely insane, man. Keep Learning is doing a very, very good job today. Phenomenal results, man. This is, I mean, we got some members absolutely killing it. So big shout out to all the members within Trader Society, man, who beat Wall Street today. Wall Street today got absolutely crushed. This is crazy, man. A 400% return on your portfolio, man. That is absolutely insane. Big shout out and congratulations to you. So, yeah, big shout out to members within Trader Society. USN, you were crushing it today within the chat puts. I noticed that. Very, very nice job. So yeah, big shout out to all the members within Trader Society, and again, big shout out to Ricky Garcia. Big shout out to Ricky Garcia, man. He's been a new member within the chat. He's been following me for years on social media. He recently joined the program, and I could already tell this is someone who has, you know, a head on his shoulders. He's very aware, very you know, conscious of his trading, and he waits for the best setups to come to him at the best price, and he gives good analysis. And you could just tell by the way he thinks and by the way he trades, this is someone who can get exponential results in the future as long as they stay consistent, as long as they stay disciplined and they continue to improve. I can see him, you know, easily being one of the greatest members within Trader Society that we have if he stays consistent with it. So big shout out to him, man. Absolutely killing it. Now, in terms of the SPY, what I want you to understand is in terms of the SPY, from a macro point of view, this doesn't look bullish. If we're talking like macro perspective in terms of how does SPY react from these massive gap downs, I mean, it's really not looking that bullish. It looks very, very bearish from a macro point of view. You know, for the short term, this is the main thing I want to address in terms of trend reversals and levels that the bears need to be wary of. So this would be your main level, man. There's a gap that hasn't filled yet. It's at $390.76. We will likely see a short-term reversal, a short-term bounce for scalping where you get in and out at this level. So in terms of call options, my main interest is $390.76 because of the gap that's waiting to fill there. Let me just double check the chart right here. Yeah, it's really going to be $390.76. That's where my level of interest for micro scalping calls would be. Now, for SPY to go super bearish for the micro, for this crazy drop to continue, you need two things to happen. You need it to crack below 390.76, and then you need it to crack 388. If it can crack that zone and react bearish in that zone and form resistance, the next level it's going to sell off to is the lower 380s. The lower 380s would be the next level that it goes to. You know, I just want you to understand, we were just at 411. And right now we're at 393. It's due for some sort of bounce. There's gaps waiting to fill above. Here's one theory that I do want to throw out and one pattern that I want you personally to be aware of. So, you know, you can see right here, SPY had a nice gap down, followed up with a nice gap down. Today's gap down was a lot bigger than the first one, but SPY did start to bottom at that key gap fill support. You could see it had a massive sell-off. It had multiple gaps down, and on this big gap down day, the next day and the day after that, it started to bottom at this gap fill level. And then once it bottomed at the gap fill level, it had a short-term pump back up, and then it continued to drop further. So my current views in terms of bears, I would say worst case scenario for the bears as of now is, and the way things are looking, we bottom towards this 390 gap fill level within the next 2 days, not right away within the next 2 days. It kind of sits around that zone, and then it pumps back up. And then after that, it sells back off. So from a macro point of view, things are overall bearish. From a micro point of view, I want to bring a lot of awareness to this support channel. You know, the support channel at 390 to 388, there's a lot of support. For us to go super bearish like right now and continue, it needs to crack that support and react as a resistance. Otherwise, you're going to see some consolidation and you will see a nice little pump back up in attempts to fill the gap. It's not going to make it all the way to 410.97, but we can see a move to 406 to 400, to like right around $400, 400 plus, right around that zone, if we start to bottom out in that 390 zone range. So moving forward, I just want you to understand, this is your make it or break it level in terms of the micro. It's 390.76. 390.76 is your make it break it. Overall, we are super bearish. For the micro, what can occur and what is a possibility? This is the one possibility. Like I said, we kind of bottom out towards the gap fill level like it did right here, and we get a nice pop back up, and then it sells off again. Now, the other case scenario is we just crack through 390.76, and if that reacts as a strong resistance level, then the next level is 388, and if 388 cracks, then the next gap fill level is all the way down here at 381.95 on the SPY. So just to understand, we are at make it or break it support. The SPY literally had a nice sell-off right here, pumped back up, topped out at that previous support level. Remember I told you 2 videos ago, 411.40, one of the best levels for puts. I clearly stated that on one of my videos. And then I said it breaks above that, then 415 is the next level. But so yeah, it cracks support, it pumped back up, turned previous support into resistance. Now it's gapping down. That is super bearish. This is super bearish. It's, if you just look at the trend, it is consistently cracking support, and when it pumps back up to that previous support right here, it reacts as a resistance, and then it follows up with a sell-off. So when SPY is doing this and it gaps down, for the most part, overall it sells off. For the micro, we could see some pops at that 390 because it's due for some sort of bounce, but overall it sells off. So from an overall point of picture, in terms of swing trading within a couple weeks out, we're looking super bearish. That's what we're looking right now. Also, the volume is insane. You could see right here when SPY was gapping down at this price right here with the crazy amount of volume, it continued to sell off and got crushed. So that's the second possible case scenario. The volume was really high today, and you have this massive gap down. Previous support reacted as resistance, which is bearish. Now you got the massive gap down. We're back towards this support level. I'm telling you, like, once the next time you see this 390.75 crack, and next time you see 380.80 crack, it's going to be another bloodbath. And then, well, where are we going to? We're going to right here, $382. $382 would be the next level if that occurs. So those are the 2 possible case scenarios. That's what I want you to be aware of. Next time this cracks 390.75 and 388, it's going to be another bloodbath to 388. And just be cautious and be aware of this 390.75 level, because before that crash occurs, it will occur, but before it happens, there's a possibility where we get a short-term bounce up, and then that will be an opportunity to buy puts into that bounce. And then, well, what would be the best level if it does bounce? One of the best levels would truly be 406.60. It's going to be very tough for it to get back, though, to get back that high for the short term. But this is how things are looking, man. Overall bearish, and this is going to be an opportunity in terms of swing traders. If we get a pop back to then swing puts again towards a key level in this 400 zone that we talked about for puts. So that's my thoughts. That's my overall analysis in terms of the SPY. Those are the possible case scenarios that I'm seeing right now, and I gave you guys the zone. Another thing that I want you to be aware of is we closed at 393.10. So 393.10 is your make it or break it level. If that reacts to support, the SPY will pump back up, and this is another thing I want to bring awareness to. So in terms of what I want to bring awareness to is this. If you look at the overall trend today, every time SPY cracks support, right? And then once SPY started bottoming out and then had its pop and cracked support, it would retest that previous support. Bottoms out, crack support, retest that support. Bottoms out, crack support, retest that support. One thing that I want you to be aware of is this. We have not retested this support yet. We just cracked it. We never really retested this $397.60 level. And if you've been studying the trend in terms of today, every single time when SPY cracks support, it would retrace that level that it was previously sitting at. And the first time that stopped occurring was basically right here, where it just kept selling off. It just kept selling off right around here, and it never retested. So I do want to bring some awareness to this level as well. This is going to be a level of interest that I'm going to be paying attention to. $397.60 is going to be a key make it or break it level for puts this week. This is another key level, 393.10. So just to go over the levels right now, we are at key support. 300. If you see this zone right here, we'll call it 393.10. If 393.10 cracks, we go to 390.76. If that cracks, we go to 388. If that cracks, then we go to 382. And then in terms of, well, where does it go for the upside? You just work backwards. That's where it goes for the upside. So if 393 holds, then the next level we go to would be overall 397. If you see 393 holding, it's reacting as support, it's breaking out, we will see a pump back to 397.50. That's going to be a key level of interest for puts. I'm telling you, when it retraces back the first time, that's the opportunity for puts. You watch. I bet you that's going to be a good one. I bet you if we rip back this week, if it happens and we rip back this week, I bet you 397.50 initially will be a first good key level to scalp some puts on. So that's something that I'm going to be keeping an eye on, is that 397.50 level, because the SPY never retraced back to that previous support and it had a very massive sell-off and overreaction. So if we see an overreaction to the upside, it should be a nice reversal play for puts at 397.50. So in terms of resistance levels and not playing puts at support, that would be the resistance level that I give you. And that's how I came up with that in that sense. So that's my thoughts. That's my analysis. In terms of tomorrow, if we go green to red, crack 393.10, next level is 397.5, key gap fill level. If it bottoms, then it goes 393. If we break above that, then it goes 397.50, best sell for puts. If 390.75 cracks, then we go to 388. If that cracks, then we go to 382. So those are my overall thoughts. Those are my overall analysis. Just to quickly go over the key levels. I would say the best level for puts as of now is 397.50. That'd be the best level from here for a nice micro scalp. In terms of a key level to look for, we'll call it the middle level, 393.10, make or break. In terms of bottom levels, we'll call it $390.75 to 388. And then if those crack, then it gets wiped out to 382. So save all those levels. They're going to be relevant for this week. That's my thoughts. That's my analysis on the SPY. In terms of what stocks am I watching, I got a couple on my radar. I'm interested in Apple and Meta, nothing really else. So in terms of, in terms of Meta stock, this one is getting interesting. We're getting very, very interesting here. We're at 52-week lows. It's looking very bearish. When this gaps down, overall, you could, like short term, you could see a little pop back up. But overall, it looks like it wants to continue to drop as of now. And just remember, the analysis that I'm saying, this can all change within 1 day's worth of candle. That's why there's always updates and stuff like that. We're in a very volatile, rapid-fire, flip-floppy market. But as of now, this is bearish, man. This is extremely bearish. When you see these big gap downs like this, it's just overall bearish. So what I want you to understand about this one is we crack support, but the question is, can it maintain a resistance level? This is what I want you to be aware of right here. $154.25 to $154.25 to 153. That zone. If that zone reacts as a resistance and it's breaking down that zone and looking bearish, it's going to sell off and continue to get crushed. If it pumps back up above 154, 155, then it pumps back up and goes micro bullish. So that's what I want you to be aware. And again, a lot of these are due for some sort of pop back to this previous support, which is going to be a key resistance level for puts. So the support level on here would be 155.80. But the main one is going to be SPY my focus. So in terms of Apple, Apple is looking very, very bearish. This looks more bearish than Meta stock currently. It's gapping down. It's at make it or break it support. In terms of overall direction, it looks like Apple wants to fill the gap at 151.80, and then we will likely see a bounce there. So I could see Apple bouncing right around this level right here, this previous resistance gap fill level, see if it can bounce at that gap close reversal level right here for potential call scalp. If it cracks that, then it's going to be a bloodbath. So in terms of the key levels that I want you to focus on for Apple, previous resistance at 151.27 and gap fill level at 151.60. So these are the levels where you're going to see stocks going crazy, and you just see how they react. And if it's forming a support, you can buy calls. If it's forming resistance, it's forming a roof and not a floor, then you could play puts, right? Just understand, puts just had a massive move to the upside. But that's what I want you to be aware of in terms of overall direction. I mean, overall we are bearish, but we could see a short-term pop, and I gave you the key levels. So the key crazy levels to pay attention to, and then from there we're just trying to determine if bulls or bears are in control, if it's forming support, a floor bullish, or if it's forming a roof bearish puts. That's all we're trying to really figure out at these key levels. So for Apple, it's really going to be this 151.60 level, that gap fill level. For Meta, key level that I'm keeping an eye on is this 154.25. And then for SPY, like I said, that 397.50 for puts. And then I want to see how we react at this gap. We got a gap to fill towards this 390.78. We have a gap to fill towards 390.78. So yeah, that's really what I'm looking for in terms of the SPY. It almost filled it. So that's my thoughts. That's my analysis on overall trend direction with the SPY and with stocks, and that's what I'm going to be watching into this week. If you do want to be a part of Trader Society, that's going to be the first link down below in the description. Once you join Trader Society, it is a one-time fee and it's instant lifetime access. You can trade live with us every single day. You also get access to the Discord server, the chat room, the networking opportunities, the members within the chat where you can send them direct message and build network and relationships with these people. We got some very serious traders and we got some very profitable traders within the chat. We have a good overall group, and I'm telling you, there's some key people in there who could really help assist you in the right direction. We also have the video lesson library. The video lesson library is where you will learn the unique gap price action trading strategies that I've created over the past decade. That'll teach you how to go long or short, when to buy calls, when to buy puts, how to trade options. It'll also show you risk management, position sizing, psychology, and mindset training, along with all the unique trading strategies that I've used over the past decade. You also get access to the watch list, the stock analysis, and the real-time trade alerts. Not for you to blindly follow, but for you to understand and for you to show you why it is that I think this. And I'm really going to help show you that within Trader Society with the further upcoming streams to come. With that being said, if you want to be a part of the group, it's the first link down below in the description. And I will see you guys into this week.